updating you about this trade I took. Last actually week I did not take any. This week I did not take any trade actually. 2026. Okay, this thing. I'll just keep it like this first to show you this thing. Okay, PNL, which is this future and options, and this week. Okay, for now I did not take any week. This trade was just a scratch. I did not even take it. It was just for testing, as you can see. It was not even considered. Okay, and this was today's trade, which was this. Okay, as you can see right now, the immediate order flow on daily is bullish, even though this thing full trend is bearish, but the immediate doll on liquidity, this thing draw on liquidity is for now bullish, which you can see using the 188-minute time frame. Okay, we are making green bars, green bars, green bars, green bars, and on that I took my setup. The setup was simple. This is why this is 47. That a family capsule form from this thing 9:15 and this thing 10:2 candle. Okay, which is this. Okay, and you take an entry beyond 11 o'clock. Okay, which is this. Okay, so this is like a trade which starts not mid but later half of AM and goes towards PM session, which is this. Okay, this was the drop. Okay, most people would have been scared by this, but again, now how to know this is not a very big drop is the a good way to do that is basically look at the ADR. Okay, I use 47 minute. This thing length is 8 by 8 because there are 8 bars in a day. Okay, 8 47-minute bars. Okay, you can use Ali also, but the problem with Ali is the last bar, which is from 3:15 to 3:30, which is not a complete bar. It is just 15 minutes, so it might give you a little skewed results. But yes, you can take 1 hour. 47 minutes if you take, right, you will get perfect this thing divisions of the day. As you can see, the Ali bar, I think, where does the Ali bar start here? Any 47-minute whatever it is starts here. Okay, which is 10:45. So from 10:45 opening you draw 160. Okay, if it remains within that, right, that means it's a good trade, which happens here. Okay, we get an immediate bounce from there, and then we get a fair value gap here. This was my entry, this fair value gap. This was my first lot. Okay, and the second lot was somewhere here, which you get a confirmation here. We go down the fair value gap, we form a order block or change in order flow, whatever it is, and then we just go up. Okay, and then I took my exit at this bar at 1, what is it, 135. Okay, which is this. Okay, 11:20 first and 57, and this thing. Okay, it was at what, 13:37. Okay, which is 13:37. Okay, and this was a trade for this, and this was the profit. 2 lots I took. This thing capital required was I think this one was this thing 68,000. 2 lots of January futures, 2 lot of this thing puts, which are obviously zero now, but I think they costed around 2 rupees or 3 rupees there, which is yes, 2 rupees. Okay, so it was just not even this thing. Oh, and this thing brokerage is 500 rupees, so that does it quite a lot of profit. But that's it. Tomorrow is pre-budget day, so I don't know what to expect, but if I do get a trade, what I'm thinking is right now we are actually pulling towards this highs. Okay, that's my this thing. To take a trade tomorrow, I need to see this thing. So this was this thing, right? It should fall within ADR, which is okay. Yesterday's ADR was supposed to be 516, so it is not overextended also. So if I'm supposed to expect any a trade tomorrow, I think what I can expect is either we can actually open and go close below this 146 level, which is this, and once we close at 5 minutes within the first 15 minutes, then yes, we can expect a big good move up. Or what we can do is we gap down tomorrow. Okay, we gap down, or we open flat and we fall around this thing 115 to 300, around 300 points, which is unlikely. No, it actually is very likely. Okay, this is your previous day low. Okay, so we can actually fall this. Okay, this is what I call a rubber band trade, that let's say we're going up, right, and then suddenly one day we just fall. Okay, and that fall is just very this thing immediate fall. Okay, it is not a this thing continuation fall. To give you an example, Example, I think I had taken this trade and actually not. I don't know if I posted this trade. Not finding it. Sorry, More. I think it was Nifty. I think Nifty. Yeah, it was Nifty. Okay, no, this not Nifty. No, not this trade also. No, 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 no. No, 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 no. Oh, can I show this thing? PowerPoint presentation, which is this. Okay, trading ranges, 47-minute this thing. Okay, this was a trade actually I took today. This one is that this one. Okay, same thing. Here where there's a fair value gap. This is a 47-minute fair value gap. By 11 o'clock you get a trade, the first fair value gap or the change in trend, which is here, bearish fair value gap becomes bullish fair value gap, buy. Okay, this is the first example. The second example is same thing. This is the early fair value gap, 112. Yes, by 11 o'clock you have this thing, trade. Yes, you take your profit here. If you want, you can trail your profit, whatever you want. Same thing here, as you can see, fair value gap is there, early fair value gap. By 11 o'clock you have an entry, bearish fair value gap, continue, boom. Okay, this was a this thing expiry also. So depending on the expiry, sometimes you can expect a very big move, very fast moves. Okay, it depends on how the operator or whoever wants to this thing. This is a very important example. This fair value gap does form. Okay, now this is, most people will think this is a very good fair value gap because the sheer size of it, but you should also understand when a fair value gap forms at resistance. Okay, which is, I think this was actually previous week high or something, or early high something, which makes it a very low probability fair value gap. Basically it is like you have this thing, what is that, breakout failure. Okay, as you can see, these fair value gaps are never formed at this thing, proper extreme resistance. This I would have considered extreme resistance, which is not there, it's just internal resistance. Okay, this also, as you can see, this is extreme resistance, which is not here. Obviously this is extreme resistance. I think you can make out the extreme resistance what I'm saying. Okay, basically anything which is this trade, what should it, this was the today's trade. Okay, and anything else? Yeah, and this was today's trade, 11:36. Okay, 11, where is it, this thing, overextended opening trade, this one. Yeah, this is overextended opening trade. Okay, can I show good examples here? No, this is overextended, the different setup. Opening range, PM session, opening trade, rubber band. I can't open this, maybe some other day. And that's it for today. If I can show you, okay, this was the day. Amazing, bro, amazing. Okay, so as you can see here, I remember taking this trade. Okay, 24th Jan. Okay, as you can see, right now a bullish. Okay, the immediate trend is bullish. Okay, these green candles you can see, 1 2 3. Okay, so you know it is bullish. Okay, in this trade you want, so if you want to buy, okay, you want to 100. Okay, so this is this thing, 47 minutes. So for whatever 47-minute this thing ADR you're getting, right, you have to multiply it. Okay, which is 100 rupees, 100 rupees or whatever it is. Okay, and then this move should happen within, what is that, within 1 hour of 47 minutes, whatever you want. If by 10 o'clock this should happen. Okay, and the first either you buy on the first fair value gap of 5 minutes, or you wait for 2 minutes shift, whatever it is. Okay, was it the same thing? Yeah, as you can see, this is where you get your shift. Here you can buy here whatever you want, and then yeah, perfect. As you can see, now this might look very scary to buy, but considering the all this thing, context behind you, previous day low, overextended, the way I see this actually is that most people would have bought into this move, and this is a way to remove this in the participants. Now again, I don't think so the market makers actually know how many orders actually sitting. I mean, most people actually put a mental stop loss, or maybe even if they put a stop loss, these market makers cannot know how many stop loss are there. But when you actually move the market by this much, okay, I think most options will just shoot up, and most this thing people will actually feel a quite bit of this thing sting in this thing, but okay, so that's when they get out, and then that's when they get in. Okay, I hope if you actually go behind that, you actually find more examples. The best way to see these trades is this thing: look at a 47-minute chart, and then you will find it. Okay, 47, this one, the first bar is down bar and it goes up. So if you are bearish, you will get this thing, big green bar first, and then it will go down. Okay, this is not, no. This setup does happen quite a lot, like a lot of times. Okay, this is not that setup. Okay, you should understand this, that this setup is actually with the trend. That means if it is going down, you want a green bar and then it should go down. Okay, you don't want something other than that. Okay, it's a trend following this thing, so you're basically buying the dip, no matter how cliche it sounds, but going with the trend is the most important thing ever, I think, for a trader. You might this is this thing, 47-minute fair value gap. If you go actually right, you will get a fair value gap, and then the first 5-minute fair value gap, which is buy, and that's it, this thing move. Okay, anything else? 10, 9, 15, 9, 15. I feel the most actually here also, as you can see, fair value gap. First 5 minute fair value gap will buy. Okay, you get, and that's it for today. Have a good day, bros.